So as I mentioned, I've made frequent visits over the past decade to Brazil, and it's really amazing to me the vibrant culture, the energy, the determination to stay competitive even during the darkest economic and political days that the country has experienced over that period of time. And there's no doubt that it truly has a transformative, innovative culture to the country. Here at NASDAQ is the home of innovators and visionaries. 7 of the 10 largest IPOs in technology last year chose to list with us. And more importantly, we welcomed 2 incredible visionaries from Brazil to join the NASDAQ family. Both have already made a tremendous impact on the continued growth of the Brazilian economy. Obviously, leading the way of those 2 IPOs was a company in the Fintech space called Stone. Many of you know it was the 7th largest IPO in the U.S. last year, raised $1.2 billion at about a $9 billion valuation. If you need to know anything more about the company, in addition to talking to management, you can talk to Steve Stout. He knows the company. He'll be on our next panel. He knows the company better than anybody. But Stone really empowers merchants and integrated partners to conduct electronic commerce seamlessly across in-store, online, and mobile channels. It's really an amazing company. And they rocked this place when they came in for their IPO. It was unbelievable. So while we think that there is ample private capital, more and more companies are starting to realize that there is great value in becoming public. Robust M&A cycles and IPO cycles tend to flow together, not separately. And we seem to be riding that wave already. Here in the US, the market feels very strong. And I've never seen, in the 10 years that I've been working in Brazil, never seen a greater opportunity for IPOs from Brazil to tap the U.S. markets.
So I think having sound financial reporting, being able to close your books quickly and correctly and on time, having the infrastructure to be able to sustain a public company. What I tell my clients a lot is I can get you public, but then the problem starts, is being public. So having patience, doing things the right way, taking a lot of time to think about all of the issues you're going to face as a public company, really is something worthwhile to do, and not rushing to a decision or rushing to market unless you need to from a corporate finance perspective. If there's a pressing corporate finance issue where you need to raise capital or you need to access the markets, that is a consideration. But sound financial reporting, having the right people in place, particularly in the finance and accounting organization, making sure that you understand the data in your company. A lot of times companies don't begin to look for the KPIs or the metrics inside of their company and understand which systems they're pulling from and are they integrated until the IPO, which is the first time they actually have to prove it to some lawyers that these numbers are real. Going public is a little bit of a spiritual journey. It's also a little bit of soul searching because, oftentimes it's even more so than in your capital raises. Going public is the first time you really ask yourself, who are we? What are our competitive strengths? What are our growth strategies? What's our key differentiators? And sometimes you'll see companies realize that who they are and what differentiates them isn't what they thought, or maybe the founder had one vision, but the company ended up creating something entirely different. So I think really taking the time to know thyself, right, and know your company, know its strengths and its weaknesses, really understand what it is that differentiates you in the market. Why are you winning customers versus just marketing or pricing? And maybe that's okay. Really understanding your weaknesses, I think, is probably maybe even more important. Clearly thinking about your growth strategies. A lot of times when you're running a company, particularly as you're heading into the IPO phase, you're probably doing very well, you're very successful, growth is coming at you very fast, so you don't have a lot of time to sit down and think strategically or even philosophically about your business. So it's very important that you do so and really understand yourself as you begin to position yourself. Second thing is, I think, understanding your market. I know that sounds very basic and 101, but really understanding the structural issues that create the problems in your industry that you're answering. And you really want to position your strengths and your growth strategies in the context of your industry or your market's problems and how you're addressing them. And a lot of companies don't take the time to really think that through. The next thing I'd say is a really important consideration, particularly for Brazilian companies, not all Brazilian companies, but a lot that we see in fintech and in tech, is your market isn't just Brazil. I try to tell a lot of our Brazilian companies, you're not a Brazilian company. You're a global company. You happen to be in Brazil, but no one thinks of, Apple as an American company, or Google or Facebook. These are global entities. And a company like Stone, for example, I fought very hard to change a lot of perceptions that this wasn't a Brazil investment. This company happened to be in Brazil, but it had world-leading technology and was doing things at the cutting edge that nobody in the United States was doing. And they were using technology architectures, artificial intelligence, very elegant APIs and cloud processing that's at the forefront of the world. And so, I would say to Brazilian companies, just because you're in Brazil doesn't mean you're a Brazil-only investment.
Steve, as you think about that, if you're a Brazilian company and you think about who your market is, and you determine that you really do have a global market and a significant U.S. investor base, what goes into your decision-making process when you are that company and you're thinking about whether you want to list solely in the U.S. or do a dual listing or just list locally?
I faced this with a few of my clients in the past. This is not always true. It happens to be true in tech and in fintech. But, as you're thinking about where to list, you'll hear bankers talk to you about valuations is usually one of the biggest drivers. In the U.S., and to a lesser degree in Europe, but mainly in the U.S., we have such specialized portfolio managers and investors and investor bases that they tend to be a little bit more educated about specific sectors or specific technologies or specific value propositions, and so they'll pay more for it. They'll appreciate it more and they'll pay more for it. So the consensus tends to be that you'll get a higher valuation if you list in the U.S. versus your local market, where investors tend to be a little bit less specialized and more generalists.
Good. And I think one final question. Stone, you mentioned Stone, obviously, which was very successful. In your view, for this year, for the years to come, which are the market perceptions for Brazilian tech or fintech companies in general, and what could be expected by them in terms of market access and interest and appetite of investors?
Brazil is a little bit of a unique country in my world, in fintech. We talk a lot about the renaissance of fintech in Brazil. We believe Brazil is actually at the forefront of fintech right now in the world. A lot of investors have talked about China and India and the evolution of fintech in those markets. To a lesser degree, you've seen a lot of innovation in Africa and, of course, in the U.S. and Europe. But Brazil has some unique characteristics that make it incredibly attractive for fintech. And so you're seeing some of the most advanced fintech companies in the world, forget about that they're Brazilian, just happen to be in that market. The regulatory environment is positive for fintech companies. The way that the banking structure was originally set up and grew up really fostered the opportunity for fintechs to come in and disintermediate in a very tangible way, in a very demonstrative way. Also, the Brazilians, to a certain degree, have the advantage of maybe following a little bit behind some other emerging markets. So they're not using same technology. Brazilian fintech companies tend to use some of the most advanced technology in the world, even compared to the US. So you're talking about cutting edge capabilities and functionality, real differentiation, and a massive market. We're talking about one of the largest tech markets in the world just to begin with, one of the largest populations in the world. So a very target-rich environment to grow from and then to expand out of.
A moment for us to turn to Scott, which can bring the investors' perspective to the discussion. Scott, from your perspective, how the Brazilian startup ecosystem evolved since you first looked at the country and started investing there?
Sure, thank you. Good morning, everybody. First, let me just introduce myself, Scott Sobel. I'm the managing partner and founder of Valor Capital Group, and we are a venture capital and growth equity investment platform that focuses almost exclusively on Brazil, but we position ourselves as a cross-border investment platform. We'll also invest in U.S. and international technology companies and help them go to Brazil. And personally, my family's been living in Brazil since 2005. I'm not Brazilian, but it's my second home, and I've been in Brazil pretty much every month since 2010. And if you talk about the technology ecosystem, the startup ecosystem, there's just one point of reference that I like to make is that in 2010, when we found the business, one of my partners had to really start, if you remember, Start 2P, which was the TechCrunch of Brazil, to help organize the ecosystem. It was, going back 8-9 years, there wasn't much of an ecosystem. It had gone through a 1.0 cycle, but there wasn't much happening there. And I believe the market has grown significantly since then, has matured significantly since then. So we could point to a couple stats. I think we're all data-driven in this room and in this town. But from a funding standpoint, you're talking about sub 100 million in funding in venture capital back in 2011 to well over $1 billion in annual venture funding that we're seeing. I think in 2017 we hit that mark of over $1 billion. And today, about 65% of that comes from late-stage rounds, and that is up from 20% in 2015. So you're seeing capital coming into the market. It's not just from ourselves and only a handful still of dedicated funds and venture funds to Brazil, but now international investors are coming into the market, and we could talk about that. Actually, I'll stay on that point for a moment. If you just look at our portfolio, where over 75% of the portfolio is in Brazil, it attracted over $2 billion in follow-on funding over about a 4.5-5 year period. And our Brazilian portfolio made up over half of that, and that excludes the Stone IPO of over $1.2 billion. So it's really important for Brazilian companies to have a bridge to the U.S. and the international markets to bring that capital in, because in the past there was a scarcity of capital, but it's increasing. And so we've seen the repatriation of Brazilian MBAs at an all-time high. I think that the stats that we were seeing were over 37-40% of MBAs after they get their MBA are going. Brazilian ones are going back to Brazil to capture this opportunity, which is great. We're seeing serial entrepreneurs now investing and mentoring in a new generation of entrepreneurs that has happened here, it's happened in Europe, and it's starting to happen in Brazil. And we're seeing that with Andre Street and the founding team of Stone and several other of our companies, which is great. I would also comment on the number of accelerators in the market and corporate venturing that's increased. And we've seen a huge focus on I'll call it the conglomerates in Asia coming to Brazil now and fostering and further developing the ecosystem.
The expectations for this year and years to come. Why would you say that there is this momentum in Brazil right now? Which factors are, in your view, driving it?
Sure. Let's take a step back when we're talking about the market, and I think Stephen hit upon a few parts of it, but just so we're all on the same page. Brazil is the fourth largest digital economy in the world. You have over 200 million people. 50% of that is in the middle class. It's one of the largest mobile phone markets in the world. A stat that not a lot of people are familiar with, Brazil is the second largest social media market in the world, and the level of engagement in Brazil is larger than anywhere else in the world. So you have a large, connected, and engaged population. So that's the backdrop. Which is a big part of it. Then you talk about what we're seeing here from the macro and political environment, and that has shifted dramatically. Those stats that I gave you earlier, and a huge amount of value creation happened during a very difficult period in Brazil. Now we're seeing a much more open market government that's looking to have a huge privatization moment. Fiscal reform is happening. Pension, you're talking about inflation stemmed, interest rates at an all-time low. So you're talking about a much healthier macro and political environment in Brazil. So you have the combination of a large, connected, and engaged population. You have a healthy macro with tailwinds here, and the other elements that I talked about, the secular trends that we're seeing, make it a very healthy market for venture and growth returns. So it's an exciting time to be in Brazil, and encourage more collaboration and investment there.
We're seeing venture capitalists and investors proactively seeking investments in Brazil and emerging markets because they recognize some of these trends. So it's not just Brazil companies trying to attract investors. You're really starting to see a shift in investors proactively recognizing these trends and seeking good investments in Brazil, which you didn't really see 5 years ago even.
Yeah, that was what happened with us. So we're not seeking for investment. We've been bootstrapping since the beginning. We started the company in 2012, and a U.S. investor came by 1.5 years ago and offered us an investment. And that was, back in the day, almost 2 years ago, the situation in Brazil was not the situation that we're facing now. And that happened. So this, I guess, shows a little bit how the mindset of guys like Scott opening with minds open to see Brazil in a different way, even when the situation doesn't seems good in a world perspective.
Great.
Regarding being listed in the U.S. or Brazil, for example, for us, it's much more here because we're a global company. We're offering local payment methods from all over LATAM to international merchants. So we don't do local payments in Brazil. And then we have another, so it would make total sense for a U.S. listing rather than a Brazilian listing. And also in my perspective, and this is my perspective, the Brazilian stock exchange, Bovespa, until now they tried to make some moves in the past, but they are not prepared for companies like ours. Brazil trading business is more like dealing with Petrobras and Vale, those huge companies, So, and companies like ours, even growing a lot, doesn't tick the needle in Bovespa. So, and Nasdaq has a different approach. So I think it's a combination of factors that make us considering to be here.
Based on your experiences in advising foreign private issuers, in getting their securities offering registered in U.S. What do you see as the main challenges for foreign private issuers that are also EGCs and going to that route and having the registration from SEC?
Yeah, so I think it's a lot of what Alphonse was talking about that companies have to face in terms of costs to comply with the regulatory system. You know, it's interesting when Sarbanes-Oxley came into effect and then in 2002, 2003, and then securities offering reform came into effect in 2005, what happened was essentially that companies had to pay a lot of money both to comply with financial reporting requirements and to comply with disclosure reporting requirements in the U.S. And it requires the machinery to do that. It requires the people to do that. And it requires having a lot of controls. And so all of that is costly. And I think that when we're talking to foreign private issuers who are thinking about either doing a listing in the U.S. or just listing locally and doing a 144A offering of ADRs or equity in the U.S., the biggest consideration is what is my life going to look like after the IPO as a U.S. reporting company, and am I ready to invest in all of the machinery that needs to be in place to comply with that? And to Steve's point, you know, you really have to think about that ahead of time, because once you're in the IPO process, from a timing perspective, you don't have a lot of control in terms of getting all of those items into place.
Yeah, not only because of the Lava Jato, but also because of the, I'm talking from the fintech perspective. As the fintechs in Brazil started to grow and grow and grow and grow, then Central Bank of Brazil, which is a very strong government office and very respectable, it started to say and to regulate those fintechs, not in a way to block them from the market, but on the opposite, to have them working, but under a framework fully comply with what we are discussing. Of course, that increased the costs, as we call in Brazil, the regulatory costs in Brazil for companies in the financial technology market became very high, because by the end of the day, you are regulated by Central Bank of Brazil, which is a very strong regulator. So, but Andrea, it all comes in the same direction, which by the end of the day is good not only for the companies but also for the market.
I think we got on time for time. Thank you so much for
Thank you very much.
participating in this.